Good morning, good afternoon. Let me arrange this a little bit. Here we go. Good morning, good afternoon, good evening. Hello, hello, hi, Ola. Good morning, Val. Hi, Suki. Hi, Diana. You know, bank holiday today. Yeah, I know. I saw it on Forex Factory. How's the holiday? Bank holiday because of the coronation. Did you guys catch the coronation? You do. Well, we do. Relaxing and lots of good food. Send some over. Send some over here. Hey Chiwan, how you doing? We'll give it a couple of minutes before we get started. Hey Carlos, good to see you. Hi Booba. So Vel and Suki, are you big royalist? Did you get like good souvenirs to keep as well? Let's see. Let's see what happens today. It seems like we're getting more people on YouTube than we are on TradingView, so it's going quite interesting. Everyone's more active on YouTube than on TradingView. Hey, at least you watched it. That's still good effort. I only caught a little bit of it. Didn't watch too much. Just didn't have the time and effort to sit around and watch. We shall get started very quickly. Anyone had good trades over non-farm payrolls on Friday? I think a lot of people have. Actually, I think most people don't trade on non-farm payrolls. So let me know if you do. If you did jump into any trades during the non-farm payrolls. I did the euro, so I'm very happy about that. I caught a little bit of the yen. I didn't want to hold on. Didn't feel like I could hold on, but it worked out quite nicely if I did, but I didn't. Isn't weird that non-farm employment was positive? Hey, it came out as I expected. Came out around that 250 number. Should give myself a pat on the back. Came out almost as expected. Ola caught the US Swiss franc drop. Very good. Diana did US yen. Well done. Hey Jamil, how are you? Good morning. Hey Mustafa Sepia, good to see you. Hi Amphira, good to see you too. Yeah, right. So I'll do a quick disclaimer of my disclaimer is that I've been rushing around all today. I haven't had a look at the markets too much, so I'm going to be looking through this almost. No, I did look at it. I did have one trade, made some money on that on the Aussie this afternoon, but still a relatively fresh view of the markets today. So just sharing with you guys initial thought of what I'll be looking at later. Yeah, I know, Bubba. I was quite fortunate there. Hey, Angel Case, good to see you. Good morning. Alrighty, so let's get started. So, Monday, brand new week of trading. ahead, we had a lot of news last week. We had a lot of volatility last week. Ended off the week with that same volatility. We saw non-farm payrolls come out. Was very fortunate to have guessed it correctly. I wouldn't say predicted. I would have guessed it correctly. Did make a couple of good trades there. So I hope you guys, watched or were on the session on Friday or watched the session on Friday. Um, Many of the trades actually performed quite nicely. So if you did, do put it into the chat. Let me know how you went on Friday during the non-farm payrolls. This week we actually will have not as much craziness as last week. We're not going to have. Last week we had the Aussie interest rate decision, we had the US with the interest rate decision, and we had the ECB with the interest rate decision. This week we're going to have inflation numbers coming from the US, and then also the Bank of England with their interest rate decision. Okay, so possibly still some volatility to be had, but I think that it's possibly going. I'm saying possibly too many times. It's likely to be, might be slightly easier to trade. Okay, might be slightly easier to trade. Hey Nick, how you doing? So with that, what we do here on the daily market analysis, I realize that a lot of our community members still don't know about this daily market analysis. We do this at 3 p.m. every day, Monday to Friday, where I share with you fundamentals, what happened on Friday, on Monday here, on Friday, and then we look at what could happen today. Not much, unfortunately. Then we look at the technicals in terms of how price has moved, where we're likely to see it move towards. Combine that together, we look for some possible trade setups. Okay, but as usual, if we look at trade or when we look at trade setups, please remember that the usual disclaimer applies. Any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar is not intended to be a recommendation to trade a financial product. Please do your own due diligence, and also that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. The other thing is that if you are new to the session, please drop a message, say hi, whether you're on YouTube or on TradingView. Let me know where you're joining from. And at any point in time, for people who are new to the session or our regulars, our fantastic regulars attending, drop it into the chat. Let me know if you have any trading related questions, any particular pairs that you'd like me to look at. I'll be happy to address those for you. All right, I see Lydia's on the session, so I know Lydia's going to be asking about the pound dollar, the euro yen, and the pound yen. Is that right, Lydia? Hey, Goju. Hey, Hydro. Okay, and if you find this session useful, informative, helpful with your trading journey, please help me out. Click that thumbs up button, click that little rocket ship button on TradingView and on YouTube. Helps with the algorithm, helps us get found, helps more people jump onto this session. And then also, if you haven't already, the link for the free trading community is there on YouTube and also on TradingView. You can always take your discussions beyond this 1 hour session through the day. I'll be on that to help you guys with any other trading questions that you might have. Okay. Hey, Mad Maniac, how you doing? Hey, KK, good to see you here. Can I have a look at pound Kiwi? I think I'm seeing a reversal, but not sure. Okay, we'll look at pound Kiwi as well. Okay, so with all that said, look at that, Kiwi dollar. Jen B was just sharing about the Kiwi dollar in the community. Okay, looking at the news first, last Friday. All right, last Friday when we last spoke at 3 p.m., we had the CPI number come out for the Swiss, was at 0.2, went to 0, so a slowdown in inflation growth. We saw the Kiwi dollar drop a little bit, and then it continued dropping through, right? Oops. That's the Kiwi dollar. So on that news, no, it shot up, right? No, sorry, not drop. It shot up at 2 to 3 o'clock. Kiwi weakened, right? Kiwi weakened, so it shot up, and then after that we saw that reversal during the non-farm payroll, right? Right after the non-farm payroll. Blur screen on YouTube. Um, if anyone is having a blur screen on YouTube, do let me know. From what I'm seeing, maybe just need to refresh or just change your setting. Okay, Diana says it's fine. KK probably, wait a little bit, might sharpen up, or I don't know, do some IT techie stuff. Okay. Um, thank you, Buba. Thank you, Diana. Skynick asked for Swiss franc JPY. We can do that. Okay. So, looking at the non-farm employment change number, it was 236, got revised down to 165, expected 181. During the session last week, I was saying I was looking at about 250, came out 253, so pretty much as expected. I also think, if I remember correctly, I was looking for this to drop, either stay at 3.5 or drop to 3.4. I think I was expecting at 3.5, so it dropped a little bit, dollar strength again, and then average hourly earnings was a little bit of a surprise. So this was a surprise for me, where it was zero point 0.3, expected 0.3. We're seeing average hourly earnings increase to a 0.5. Plays a small part into overall inflation growth. So might signal that the coming inflation number is possibly going to drop, but might not drop as much as expected. Okay, so that's factoring into one of my considerations into the CPI number for this week. With that as well, employment change for the Canadians was 41.4K, a lot better than expected, a lot better than previous, and unemployment rate stayed at 5%. I think I caught that one. They were expecting an increase, but I was saying it was going to stay at 5%. So what we saw here with this news at 8:30 GMT plus 8 last week, firstly on the dollar, right, it moved up, came up to that 101.60 level as pretty much expected. This was during the news. So this is 8 o'clock. Okay, 8 o'clock here. Zoom in a bit. Started off at 8 at 101.40. News got released. Strong employment numbers here. Employment numbers there for the non-farm. We saw the dollar shoot up from 101.40 straight up to 101.77. I'll show you here, it was way outside of Bollinger Band. That's why when the hour closed, it started retracing back down, right? Started retracing back, and then it started in that range again. Okay, so it was outside of Bollinger Band, came back in, failed to sustain beyond that resistance level. So that worked out very nicely, but then it came back in. Right now, it's trading at that 101 level. Right now, it's trading at a 101 level. So why is the dollar still weakening despite a strong data from employment non-farm payroll data? Very simply, it's because where is it? Very simply, it's because with the strong employment numbers, right? So remember, I think about a month ago. When Chair Powell was testifying in Congress, and then he was getting hit by Congress members about how interest rate increases is going to lead to unemployment rates climbing, a large number of people losing jobs. what we're seeing now is that despite the most recent rate increase, right, and with interest rates in the US now at 5.25%, that has not impacted employment numbers. That has not impacted employment numbers. Okay, we're still seeing strong employment numbers. So that's one reason. Okay, we're seeing that despite rate increases, unemployment rates have not climbed. Non-farm employment change numbers are still growing, and to some extent, average hourly earnings is still growing. So it's showing strength in the economy, but it also means that Fed funds rate that we saw on Thursday last week was possibly the last interest rate increase to come from the FOMC, right? The last interest rate increase. So with that, now expecting inflation to slow down further, expecting the employment numbers are going to maintain strong, the likelihood for further rate increases in the US continues to get lower. Right? The likelihood for further rate increases is going to get lower, and that's why we see that first reaction was because of a good employment number, right? A good employment number pushed it up, and then the market anticipation that the FOMC is going to slow down or pause, not slow down, pause or stop further rate increases led to this drop, right? I don't want to say devaluation because that's a really big, strong word, but that weakness in the dollar pushing it back down again, now towards that 101 level. Okay, hope I answered your question there, Buba, about why we see dollar weakening despite a strong NFP number. Remember, it's the focus now is on interest rates and inflation. Okay, so strong number pushed it up, but then likelihood for further rate increases off the table. A stop in rate increases from the US, pushing dollar back down. All right. In gold, trade in sell direction. Okay, we'll have a look at that, Jamil, in gold. Good afternoon, Tommy. How are you doing? So right now, we're looking at the dollar. Today is the 8th of May. The dollar is currently at 101. I think that, well, look at it. It's still dropping. It's still going down. I can take this away for now. This is the equal low, breaking to the downside. I would look for it to come down to this point, to be a bit more specific, maybe 100.80. So it's at 101 right now. We're possibly looking for this to continue trading lower down to that support level of 100.80. Okay. Continue weakness down to 100.80. Just be extra careful as it looks like it heads to the downside. It's not ready yet. It's still finding that direction because it's right at that support level or the equal low level. So it could very well bounce from here, but any bounce, I'm still looking for it to turn down. Okay, and you can see that the last time it came down, right? If I drag this right across, okay, you can see that it came up, tested this level, came down, tested support before pushing up. Even beyond that, you can see that 100.80 or very close to 100.80 in Feb this year came down to this support level and bounced very strongly. And then again, if I went to the H4 time frame, 100.80, if it does break below this point, then we could see 99 or 100. All right. So back to the present moment. Oh, wait, where am I? Hang on, I'm trying to sort this out. Okay, here we go. Here we go. Here we go. Why is my chart not forming up nicely? Gets so messy. Okay, so I'm looking for this. I'm looking for this to break below this level, trade down towards 100.80. If it does break below this point, we're going to see significant downside. But I think that given that there's no big news today, we might not see that big push to the downside straight away. I think that you're possibly going to see it trade down, but might just hesitate at that support level. Okay, so that's the view on the dollar consolidating at the support level for now. Could break lower, right? Needs to close to break lower beyond 100.8, could go down to 199.9. So with that said, considering that we're looking for further downside on the dollar, looking for it to weaken slightly through today into tomorrow. What news we have tomorrow? You can see not a lot of news tomorrow, not a lot of big news tomorrow as well. So I think we might see this trade down. On Wednesday, we have CPI number looking like it might stay at 5. Remember, I was telling you about how wage inflation might slow down inflation or the disinflation. So slowing down slightly. Okay, so I think that this will consolidate here, looking for it to push down. Then looking at the Kiwi dollar, it dropped and then it bounced back up, so we take that away. It broke above this 0.6315 resistance level, now turning into some sort of a support. Take away the dotted lines, drag this right up as our trend line. In fact, I don't really need that trend line there. It's broken that resistance, so it's quite important to know. Then I would say the next resistance level would be, take this level here at 0.6377. Okay, 0.6377. What I would like to see, right, you can see it's just right there. What I would like to see is maybe some retracement and then a bounce back up, right? A continuation of that uptrend, towards 0.6377, but might retrace a little bit before pushing up. So you might do this. Okay. So what you could be looking for is buying opportunity, say about 6330 to be a bit safe. 45 pip take profit, tight stop loss at about 20 pips or 1 to 2 to the upside there. So it could consolidate here and push up, could look to buy up, or better still trade down before pushing up. It could get in a little bit earlier, but at about 6330 would be a good level. So Kiwi dollar, no counter trend, 0.6330, stop loss 20, PP 45. Okay, so we didn't see the dollar index strengthen too much on Friday. Okay, looks like it's moving. Looks like it could just go straight up as well. I wouldn't rule that out if it just goes straight up. Okay, Aussie dollar did very well. Right, came right down, hit. I didn't even change these lines. I was super stoked when I saw this. It came down, hit that support level at 0.67, bounced off, went up towards a take profit, and now approaching that resistance level of 67 or 0.68. Okay, so if you did get into the Aussie dollar, I actually traded this take this away. If you got into the Aussie dollar on Friday, let me know. But I actually did this quick trade. It was a set and forget. I got in at about 10, 9-ish. And at 10, I got into that trade about there. And then, so I did this. About 10-ish, I got into that trade. I had a very tight, so it was just that consolidation level. So I had about 20 pips. And then I had 30 there, right? Just, I didn't think that it would climb that much. So it just got to that 30 level. I think I closed out slightly before that as well. Okay, so that was my Aussie trade. Right now, it's coming to that resistance level, right? It's coming to that resistance level. We can take this away. If it breaks above this resistance, okay, so watch out at this resistance level. It could form a double top, a big double top. So push down, come back up. If it fails to break above 0.68, if it fails to break strongly above 0.68, we could see it trade back down. So you can see the last time it tried to break was only a tail, right? So if it forms a good body breaking upwards, we could see further upside. It does look like it should retrace a little bit. It does look like it should retrace a little bit, but I think that any retracement is for that, it's a bit like that, a retracement to push back up again. So we're looking for it to possibly push up, retrace, and then trade up. The next resistance level, my nose is killing me again today, is, let's see, 6920. There are levels in between. But I would say that that one would be a dotted level. Okay. So for the Aussie, what I would anticipate is for it to break above, has to close above 6815. Is what I'll be looking for. 6815. Take profit, almost 100 pips. Stop loss, I would go for 30, just below that support, resistance turn support level. That would work. And then a hesitation at about that 40 pips level. Okay, so I think that it's going to push up, or could push up, trade to this level, hesitate, consolidate a little bit before continuing to the upside. But first of all, needs to break above this resistance level first. Okay, so I only buy above 0.68, was it? 0.68, buy above 0.68, so I'll say 0.6815, buy only if breaks above 0.68. So 0.6815, stop loss 0.5, stop loss 30, TP 100. Okay. Move on to the question: why there are so many Bollinger Band on TradingView? Which ones are you using? Just go in there and search Bollinger Bands. You can just use the standard Bollinger Bands there. Okay. In fact, I have it there already. So it's just a normal Bollinger Band that you can use. Okay, so I think that it's going to struggle. It will struggle to try and break this level, because the last time we got to, the last two times we got to this point, first in April, then again in mid of April, we saw a big retracement. So I wouldn't, rush into this trade. It does need to break up strongly before we're going to see the upside move. Okay. Next up, US yen. pushing up, right? So we weren't, for this, we were saying fluctuate between 133 and 135, look for a breakout of the resistance. So it's 133 was here, 135 was there. Okay, um, it tried to break out, right? This level 38.2 is really important. Came up to this level and turned back down. Right now, does look like it's interesting that the dollar yen is pushing to the upside, considering you know the dollar index has been pushing down. So it's really because of all the other yen pairs pushing price up that's dragging the dollar yen to the upside. So I would be careful, right? If the dollar index continues to drop to the downside, if it continues to drop to the downside, it might fluctuate along this level before turning back down, right? So it might bounce around here and then turn back down. That's the view for the dollar yen, especially if it fails to break strongly above that point. Um, Now let me think. Let's see. 50% is right there. We have a big downtrend. I think what could happen here, an update of this, is that we could see it come up to that 50% level, right? We could see this. We could see this push up to 50 and then turn back down again. If the dollar index consolidates at this level, does not push up, consolidates at these levels, and then push back down. Um, Kai level says offline. Am I offline? No. Looks like I'm still alive and running. Yep. Okay, if you think that it's offline, maybe click refresh. We'll be here. We'll be here, Kai level. Certainly a lot of tech issues today. Okay. So dollar yen might be looking at 135.50, stop loss 30 pips, take profit 150 to the downside, continuation of that downtrend. Yeah. Okay, so look for it to go up, test this level, and reject with that dollar weakness. Okay, so below 135.50, 30 pip stop loss, 150 pip take profit. So US yen, test and reject 135.50, sell, stop loss, 30 pips, TP. Wait, I just saw a big long message on, I just got confused, 150. A big long message on trading view. Give me a second there, Kai level. I do too many things at one time. Okay. Can you explain the long view of US yen? I'm somewhat confused. On one hand, I see a case to be bullish on the US yen on the dovish BOJ. Yes, I agree. And better US data might induce fears of economic condition. Oil is trading higher. On the bearish case, the dollar is weakening and it might be risk aversion with the US debt ceiling issue, and central bank might want to pile into the yen, fourth largest reserve currency. Okay, good right up there, Kai level, on many fronts. Okay, so the question was, take that away for now. The question was about the US yen, right? So, yes, there is a divergence between monetary policy between the Bank of Japan and the US, and even across all the other central banks. The view was that we should see that yen weakness, right? We should see the yen weakness, which we actually did when we saw the yen push up towards that one almost 138 resistance level. Okay, but with the Bank of Japan holding with the current policy, and the dollar weakening so significantly, with, as we said, um, possibly not looking to increase rates anymore, pausing on the rate policy, that dollar weakness is dragging it down to the downside. Okay, dollar debt ceiling. The debt ceiling in the US is, I think I said this last week, it's almost like a routine. It's a seasonal news already, right? The only time that I have seen them not increase the debt ceiling was, if I'm not wrong, when President Trump was in power, right? And they just had too much going on in Congress. They decided to let the debt ceiling get hit, and then we saw the U.S. economy close for, I think, about 2 weeks. Generally, what I anticipate is that the debt ceiling will be an issue, but is not likely to affect the dollar too much. I think the bigger impact will be the likelihood of, or the increased likelihood of, a pause in the monetary policy. And then also, if the um, increased recessionary concerns, or if recessionary concerns increase in the US, it is going to influence the rest of the world as well. And then we're going to see a move towards reserve. In this case, a bit less on the yen, but more on gold, right? Because a global economic recession is not going to, it's not going to spare. The yen is not going to be spared. It's going to be hit as well. So it will be more on the commodity. So because of this, I'll zoom out on the H4 time frame and show you that is we are still looking at that upside continuation on the yen, right? We are still possibly looking at further upside continuation on the yen, right? If I just drew that right across, right? If you say to a super long-term view, yeah, I think it's going to come down, bounce, test this level, shoot up, and then just keep pushing along 130 towards 138, and then possibly break out towards what we saw last year, where it came as high as 150. But I think that big move to the upside was really driven by not just the yen, but also that strength in the dollar. So I don't think it will climb, but I don't think it will see those highs again. I think 140, right? 140, 141 might be fair long-term value on the US yen. Okay, so I hope I answered your question there, Kai Level. Very good question, and I hope a lot of other people get some different understanding of the yen in the longer term view. All right, so but we do speak about currencies every day, Monday to Friday. So whatever I'm looking at right now is for the shorter term, some trading opportunities. We're looking at this possibly trading up, testing that 50% level, 135.50, test and reject, and I'm looking to sell down for the short term, driven by that dollar weakness. Okay, did I write that already? Test and reject, what they will sell, stop loss. Yes, okay, done. So that would be a very nice counter trend trade, right? Came down, test 50. I would be very keen on selling this back down. Would be high on my list, very high on my list. All right. Pound dollar again also did somewhat as we expected. Came down, test the support level, bounced back up. If you did get into the pound dollar, let me know. For now, I'll take that away. Forming a bit of a double top, retracing back down, and you can see that resistance level was back in. To move my charts so much nowadays. That resistance level was back in May last year. right? May last year. So it tested this level and turned down. Um, so coming back to the present, I think that we could see some level of correction to the downside on the pound dollar. Okay, it doesn't work so far. Nope. Okay, we could see some level of correction on the pound dollar. I would like to see it break 1.2625. Yep. Okay, so here we go. That's what I'll be looking for. Double top formation, big double top in terms of the 1.2660 level from May 2022. If it does break, then I think we could see it trade back down towards that 1.2580 level. Again, later this week on Thursday, we do have the Bank of England with their interest rate decision. 4.25 expected 4.5, so a 25 basis point rate hike to come from the Bank of England. But again, another speculation that this is going to be likely to be the last rate hike to come from the Bank of England, right? The last rate hike to come from the Bank of England. So that might actually mean that they could hike rates, but it's likely to be a dovish hike, right? A dovish hike, same like what we saw on the ECB, same as what we saw on the FOMC. Hike rates, small push up, but then trading back down again. So in this case, looking for a possible counter trend. So about 1.2620, stop loss 40 pips, take profit. I would say 40 to start off with. If it comes down, so it's a 1-to-1. If it does break and come down, then you could be looking for it to break that 1.2580 for further downside towards 1.25. Okay. So, okay. So, yeah, despite having a new king and queen, I think that we might see this retrace. So, let me just update this. I see a couple of questions there. Pound dollar sell 1.2620. Stop loss 40. Take profit. Was it 40? Yeah, take profit about 120. 40. Take profit about 120. Um, hesitation at a 1.2580. At 1.2580. Okay, good. Now, thank you, Kai Level. Good analysis, Jin. Good point that US yen could go up to the zero point 0.5 FIP and come back down to support. I hope so, right? That's what we see right now in the charts. I've not been paying attention to the pound dollar. The US is showing weakness as seen in the dollar, but your target 1 point, we should target. The pound dollar will be weaker than the US. Can you explain the rationale behind pound weakness? UK is the weakest of the G7. Okay, I don't track I don't have the data to track the G7 growth numbers and stuff, but like I was saying, the interest rate hike to come on Thursday might be a dovish hike. Pound dollar testing 1.2660, which we saw in May last year, rejection to turn down, could be looking, and now it's showing some downside potential, could be that counter trend trade. So short term correction might not come all the way, might come back down to about that point, or yeah, I think it might come down to about this point. and then after that trade back up again. Okay, so yeah, just a short-term view there on the pound dollar. Buba asks, what drives the stock market move on Friday? Do you expect Nasdaq 100 index to sustain the movement? We'll look at the US 100 later. Okay. Euro dollar, I did this. I'm super happy about this. Got in, made that 50 pips. So that's done. Let me know if you did the euro dollar. Bounced off the support level at 1.0966. Now currently trading at 1.1046. Just remember that there is the French on a victory day, bank holiday as well. Not a lot of news to be released. I think that we could see again, right, this trend line dragged right up. You can see us supporting that push to the upside. I'm possibly anticipating the euro to push up towards that 1.1085 resistance level. Okay, 1.1085 resistance level. Could you jump into a trade on this? I possibly wouldn't. I think that, in terms of the Kiwi dollar, we have a trend continuation to the upside. Looks like it's forming nicely. Aussie dollar looking for that breakout potential. US yen possible reversal. Pound dollar possible reversal. We've got a lot of other trading opportunities across Kiwi, Aussie, yen, and pound. So I wouldn't rush into the euro. Okay, I think that the euro is going to trade up to this point, to the resistance, but I would just sit out, watch it, and see what happens. Maybe look for that sell at that resistance level. Exactly, Diana. Most likely it's going to move in that direction, but it doesn't look like it's going to be a good trade setup for now. Okay, so euro dollar, we think that is going to climb, could climb to resistance at 1.1085. Where am I? 1.1085. Could look for possible rejection. Right? So, Mark Ferrier says Kiwi dollar just entry on 0.6630. Okay, so let me just move this line a little bit just so you can see. Just remember that, it did just tap into that level, right? I would always prefer to wait for the candle to close. Always wait for the candle to close before our low to get in. In this case, I think it's still safe. I think it's still reasonable if you did rush in already. But I always want to wait for a candle to close because I don't want situations like this, right? Where it looks like it's going to break and then next moment candle closes down and then it's a pin bar at that resistance, right? So better to wait for the candle to close before trying to get into a trade, especially when we're analyzing on the H1 time frame. Then the US Swiss franc, we're looking at this level for that straddle. I know someone said they got into the Swiss franc. Diana did, UJ, someone who did Swiss franc. I lost it. Okay, someone did USD CHF. Hope you were selling it or buying it up or now selling it down. Let's take that away. Anticipating that dollar, right? It pushed up a little bit, but it can't sustain that upward move. Looks like it's going to trade down. Then I think that the US Swiss franc could trade down. Again, remember that this is a very low point. support level was where we saw it bounce a couple of times. Beyond that is at 8820, about 8820. So if the dollar continues to drop, then and you really had to force a trade, then you could look to sell it down. But I would follow Diana on this, where I think it's going to go down, but it's not clear. Even if it does break that support level, coming down is only a 35 pip move to the downside. You wouldn't enter right there, you'll be entering somewhere there, so it's 29, 30 pips. Not worth the hassle. I would rather wait for it to drop, look for a possible bounce from this point. Okay, so I would say USD CHF, possibly stay out. Okay, right, and the dollar is finding that direction right now. US CAD moved down very nicely, right? Why did it move down? Really, because on Friday we saw strong Canadian numbers. We saw that dollar first strengthening and then after that weakening, right? So on this was on the news on Friday. If you were looking at strong Canadian dollar and then trying to trade with the non-farm payrolls, you would have been tempted to buy it up, right? Especially as it pushed up, you might be thinking that it could go up. Didn't when it dropped all the way because of the dollar weakness. So that's one reason why I was telling you guys I would stay away from the US CAD during a non-farm payroll and a Canadian employment number release. Okay, at this point, same thing. It's right in the middle of that support and resistance level. Right, it's right in the middle of that support and resistance level. I would rather, you're most welcome there, Mark. I would look for this to do this. Come down here, test, and then possibly bounce back up. Okay, so if you look at this, what we're possibly anticipating, USD on the loonie might come down, dollar weakness pushing it down before bouncing back up. USD CHF might come down before possibly bouncing back up at a very low point. Euro dollar might go up before turning down. Pound dollar might just continue to the downside. What looks like it might happen, I would say, wait, just let me get the US CAD could trade down to 133. Could trade down to 1.33 before bouncing. Okay, so if you look at this, we're looking at what seems like a lot of price movements, short-term movements, continuation of the trend before a retracement, before a correction. So it looks like we might see, in relation to the dollar, we might see this trade down, test that support, and then bounce back up. Right, test that support and then bounce back up, which is what we're seeing here. Dollar weakness before dollar strength. Maybe dollar weakness before some dollar strength if it breaks below that support. Dollar weakness before that strength, possibly turning back down. Well, it's already that weakness there, so we might see this come down, consolidate, and push lower. Dollar weakness or dollar strength before. So we got different scenario plannings across the different currency pairs. Okay. Might see the dollar bounce as it trades down. Gold broke that pattern, went straight down, tested that 2000 support level, right? Breakout from this to 2020, it went a lot further than I expected. So I was thinking 2020 would be at that 50% level. It went all the way down to 2000. Okay, Right now, take away a couple of these lines. Right now, take this away. It's right in the middle. I would see that dollar is testing this level a lot, right? It's testing this level a lot. What I'm anticipating for that drop, if that does come around, then we're going to see this push up. Okay, I would not do a big swing trade on gold at the moment. In fact, I don't even do big swing trades on gold. I'm always scalping on gold because it's right in the middle of that support and resistance level. Well, it's right in the middle. Hasn't formed a clear direction yet. So I would say that um, stay off it for now. Stay off it for now. Look for it to move towards a resistance or a support level before looking for that rebound, right? Looking for the correction. I think that it is likely to trade up. It's going to bounce in this region. I think it's likely to bounce in this region. So 2000 and 2045 range between 2000 and 2045. Okay, so gold in that range. So with that, um, let's look at the for Lydia pound yen. All right, inverted head and shoulder, breaking above that neckline, pushing to the upside. Um, I would like to say that it's going to continue trading up towards that 172 resistance level. But given that we're anticipating some pound weakness coming around, might not see that trade up. Only signal is if it breaks above 1 171. Right, if it breaks above 171, you'll see 172. But I think it's likely to consolidate along this range. I think it's likely to consolidate here and then after that turn back down again. Okay, so we've had that pattern, that inverted head and shoulder pattern formed already. So we take that away, but I think we could see it test and reject to turn back down to 169. And then on the euro yen didn't drop and at that consolidation, in fact, it pushed up. I would actually like the euro yen to the upside more than the pound yen. So, just looking at this small push to the upside there, um, safer option will be you could look to get into it now, right? One more minute to the candle close. We could be looking at a 200 pip move to the upside. I think a realistic one here. 1:1 to the upside there on the euro yen, but I think that if it continues pushing up, we could actually see it trade back up to the 151.30 resistance level. Okay, new hour starts on the euro yen, looking for this to continue that upside potential. Okay, yen, CHF yen didn't drop, didn't trigger that trade. Pushing up, it shouldn't be pushing up because we're looking at the US Swiss franc pushing down, so that that strength, relative strength, is really more that dollar weakness that is pushing this down, right? But that relative strength on the Swiss franc is causing this to push up. Then in this case, I would say breaking above that resistance, and it's not a pair I trade a lot on, so I would say that's a good resistance level. That's a good support level here. You could be looking for this to push up. I would say that I don't like it as much. I just don't like. This is right in the middle in this region. So when price comes up to this region, what could happen is that it could just reverse back down. So I'm not too keen on the Swiss yen. Okay. Now let me see. Did I miss anyone else? Uh, okay, so we've done that one. Oh, pound kiwi. Pound kiwi, we saw that good, very good trade down. So take that away. That was a very nice trade to the downside. Seeing a reversal, I do think there might be some reversal here. But for the pound kiwi to reverse, we need the Kiwi dollar to weaken significantly because it looks like the pound dollar is not going to strengthen. Right? Pound dollar is still consolidating around this range. Well, you need the pound dollar to strengthen or you need the Kiwi dollar to weaken for this pound Kiwi to bounce back up. But the way it's moving, I think that might be a little bit too early to anticipate a reversal. It could jolly well trade down or reject this 2 round number level and trade down towards that 1.9850 support level. Okay. Euro yen, if 200 pips would be a great one. I know that would have been a very nice one. Possibly something I'll look at, but I always tend to forget about the euro yen. There's too many other things to look at already. Okay. Natural gas. Came right up to that 38.1 fib level, did it? I don't know why the lines are missing. Yep. 38, yep, came right up to 38.2. So yeah, it's at that level. I think that it might, what did I say? It might consolidate there, might retrace a little bit before any potential upward move. I wouldn't say that it's going to continue to the upside straight away. I think it's going to retrace, maybe come down to this level at 2.229 before bouncing back up again. And that's possibly the 23.6. So it might come down to 23.6 before bouncing back up again. Okay, so yeah, that's also one thing. Like I'm identifying levels, then I apply the fib level or the Fibonacci retracement tool to support my analysis, rather than just trying to draw the fib everywhere and then trying to make sense of it as a number. So I identify levels because of these points here and these points here, and then the 23.6 supports that view. Okay, so I think that we might see this do that. Back to that 50% level. All right. You're overall bullish on yen despite dovish. No, I'm overall dovish on yen. Just short-term bullishness because of the way the dollar is moving, or the dollar index is moving, is the risk aversion pushing yen up. Not so much on the risk aversion right now. I think right now what's happening is the it's the dollar index that's driving the way price is going. Okay, thank you, Mark. You're most welcome there. All right, so at this point, oh no, wait, go back there. Kiwi dollar retrace bounce, so this is working nicely, looking for that bounce up. Aussie dollar consolidating below that resistance expected, looking for this to push up and turn down. Pound dollar looking for that correction downside. Euro dollar pushing up. Yep, I think it's all somewhat moving in a right, likely to move in that direction. If you haven't already, the link again is there. Do join the free trading community. And then also, please help me out. Click that rocket ship button on TradingView, that thumbs up button on YouTube. YouTube guys are winning, hands down, against TradingView right now. So everyone on TradingView, do help me out. Click that rocket ship button. Um, and for now, trade well, trade safe. I'll see you all tomorrow. Thank you, Diana. Hope everyone has a big green week ahead. Okay, so let's take our discussion into the Discord channel. So for now, see you tomorrow. Bye bye.